Hey everyone, welcome back to Crypto Cash. Thank you for being back here and watching my videos. I love you all so very much. I really appreciate my current subscribers, and if you're new to the channel, thank you for giving me the chance to learn something here today, because this is a technical analysis. There's no fundamentals here, and we really just want to make sure to help educate you in best practice so you understand how to be a better trader so you can trade for a lifetime, not just for one day. Now, just bear in mind, I'm not a financial advisor. This is for educational purposes only. Only you should do your own research. And just know I have years of trading experience, so I'm going to make sure, again, that we teach you a thing or two here today. So if you're open to learning some new things, some important things that you can maximize benefit with and become a better trader, then stick around to the end. If not, that's okay. Feel free to fast forward to my prediction. It's kind of boring, though, if you were to look at that personally, because there's no shortcuts in life, and this is the right stuff. And we're going to take a look at that. And again, this is your one-stop shop for cryptocurrency analysis, among many other things, but primarily just love analyzing crypto charts, and hopefully you learn, again, a thing or two. So without further ado, be sure to check out my Telegram community. Also, a really good group of folks there. You can learn a lot just by sponging. There's no cost there. Of course, if you'd like to consider 3 to 5 signals per week, I do have a paid service through Patreon that would allow for you to understand and find good entry points. And we currently have over, I think it's 85 to 90% success rate. So doing pretty darn good there so far. But nonetheless, let's just go ahead and get right to the video. Enough chatting for me. All right, folks, let's go ahead and take a look at audio. And before we do, we're going to go ahead and take a look at Bitcoin and Ethereum first, just to get a baseline of the market so we know exactly what's going on. So if you're new to the channel, we always kind of make sure we understand what's, the two largest market movers in the industry are doing so we can make an informed decision, because without knowing what Bitcoin's doing, you're pretty much doing yourself a complete disservice and only understanding one side of the scale, right? So let's go ahead and take a look at Bitcoin first. Now, before we get started, I use TradingView.com desktop application, and I always enable my simple moving averages, the 200 and the 50, for my 4-hour charts or higher. All right, and just to clarify, we do currently have a major resistance at 42,500, current resistance at about 36,500, and a massive support at 30,000 even. Ultimately, this is pretty much the range that we're looking at, though, right now, somewhere between 32 upwards of about 35,000. That's been the channel for the last, week or two, for lack of better terms, okay? Presently, as well, the price is currently under the 50-day moving average. It has been working as a major support and resistance level, so just keep that in mind. If it comes up, it might test a few times before it breaks through, or it might reject and turn right around. As you can see here, the recent rejection before it came back a day later was lasting about 24 hours. Okay, and then it broke above, retraced back down again, and we're under. Same thing happens with the 200-day moving average as well. And keep in mind, these moving averages are things that the industry leaders are utilizing to essentially, control the market, for lack of better terms. So in that sense, what we're looking at here is that, the 200, we got about 5 days worth of retracement there. Essentially, it held the price down, and it hasn't gotten a chance to test the moving average yet. Okay, so 200 has been untested for somewhere in the range of about a week and a half. So we'll see what happens there. But for right now, standard Bitcoin stuff, we're just kind of making slightly lower lows at this point, and we need to be able to break through the 50, the 200, and the major resistance of 36,500 to see any type of breakout, so to speak, with Bitcoin and a lot of other altcoins. There's a few that are still, able to break out, like Audio, for example. There's probably some strong fundamentals there, though, right? So we got to understand that too. Moving on to Ethereum. So quickly to note, 2,900 is a major resistance that was tested about 10 times in the past, which feels like so long ago, back in June, May, and April. But right now, at this point in time, we got a major support at about 1,700. Roughly, plus or minus a few dollars there. And unfortunately, Ethereum has been terrible. Unless you're shorting, Ethereum is basically doing a terrible job of keeping up with the Joneses. I mean, if we look at this and Bitcoin, you can see that the sell-off is tremendously larger than Bitcoin. I mean, I would say maybe not tremendous, but 25% stronger of a retracement than Bitcoin. And unfortunately, that's not the way Ethereum used to perform. So now, unfortunately, with a lot of low volume and low volatility, we're seeing this kind of movement in the market. All right, so I'm glad I'm out of that position, and so are my patrons. Moving on to audio, let's take a look at one-day chart first. Now, something to note with the one-day chart is we always look at this to understand its history. Okay, we need to know where audio is coming from, how it responds to Bitcoin sell-offs and increases to ensure that we understand what it's going to do in the future here, right? Because if it doesn't, if it moves independent of Bitcoin, then what we see here recently today is no big deal. But if we identify the fact that it moves very, synonymous with Bitcoin, for lack of better terms, and we got this breakout here today and or yesterday, then there's a strong chance that that has a catalyst associated with it. Okay, so obviously do your own research. This is just technical analysis, but the fundamentals could be factoring in. So let's go ahead and take a look at April 17th. That's this guy right here. So this is a steep decline. 17th and the 22nd were the two major sell-offs for Bitcoin. Furthermore, we've got May 18th, the Elon candle. Correction, May 12th was the Elon candle. May 18th was obviously the China candle. Again, that's just an easy way to describe it. China withdrew Bitcoin from banking, so that caused a major ripple. Pretty much no coin would survive that day. That was judgment day for a lot of folks. So let's go ahead and take a look here now. As far as what's going on right now, first of all, we've got this, death cross back in June 30th. I don't put a lot of weight onto that personally, so I wouldn't, you shouldn't either. But generally speaking, that is traditionally a time in which there's going to be a retracement or a sell-off, or it's good for the bear, so to speak, because it holds the price down. It really didn't do anything with audio at that time, so no big deal. But as we can see, if we look back here at Bitcoin, we see this, up, down pattern, kind of almost straight sideways, right? For here right now, we got high, low, high, low, high, low, and then it goes low, high, low, high, low, high, low. So that being said, if we look at this here, we had a similar movement back here, but it broke off recently, and it's kind of been working on its own lately, right? So that's a good sign. Furthermore, RSI is under 70, which is also good. Basically means we still have room for growth. Furthermore, the MACD, we had a convergence back on the 27th. So anytime you see an RSI under 30 and a MACD that's swinging in an upward fashion shortly after, that is a sign to jump in and take a long position, especially if you're considered a swing trader. Short-term day trading doesn't matter. Long-term swing trading, just say anything closer to 2 to 30 days, anything longer than a day or two, then that is a good consideration. So just hypothetically, had you gotten in there, you would have had a pretty decent gain. So let's go ahead and just mark that really quick. And then, just a note here. So you got in sometime during that day, you would have been up about 73%, obviously, at the end of yesterday's trading day or just recently. Even on a low scale there, you would probably have somewhere in the range of 50 to 60% increase. That's pretty good, just based on one indicator or two. That's a good sign, right? That's a good thing. So anyways, I want to just kind of clarify that on the 1 day chart. That's usually the things I like to look for. I look for very similar things too on the 4-hour chart, because the 4-hour and the 1 day are the swing trader's best friends. You shouldn't really go anything lower than that. The 1-hour chart does help you with the cloud. We'll get to that in a minute. But generally speaking, the 4-hour chart is effectively the best time frame to identify these things, right? So let's just go ahead and do that, right? So taking a look here, first of all, with the moving averages, we've got the invert, essentially, which is considered a bullish momentum, right? So you see the bullish momentum carrying up here. But furthermore, we saw the price jump above these moving averages here, okay? Now, when it comes to the moving averages, we got the 50 and the 200. So the 50 is this one down below. That's considered a golden cross when it crosses and intersects in an upward fashion with the 200. Again, I don't put a lot of weight on that, but the fact that that occurred and the price jumped up immediately after is not really a lot of a coincidence. It makes sense why that happened. That being said, the price is above the 50 and the 200-day moving average right now. Okay, so that's a good sign. Furthermore, we've also got the RSI, which is up over 70. So typically, if you are new to my channel, I like to address the fact that when you are planning to just say you plan to sell, right? You're like, okay, RSI is over 70, I'm going to sell. Don't do it immediately. And the reason why is because if you look at here, RSI crossed over right at this point, right about 70. So somewhere in this candlestick, you would have gotten out of your position, right? But just say you wait a little bit longer until the RSI comes back down, which is right here. Okay, it may not seem like a lot, but that difference, again, depending on your position, is almost 6, it could be 6 to 15, 20%. And that's simply based on the fact that you waited a little bit longer for the RSI to come back down instead of when it first crosses 70. So if you've heard RSI over 70 is a sell signal, there's truth in that, just not exactly an instant, I want to sell my position because of this, right? Again, just something to keep in your back pocket. But what we're also looking at here as well is the MACD, and we can see that there was almost a convergence right here. that didn't even get a chance to come back down and correct itself before it jumped back up. Oftentimes when you see that, it has a tendency of ramping up a lot, right? So again, just another something to look at. Also keep in mind too that we are, basically making higher highs here. This was a little blip there, but for the most part, higher high, higher low. Not a higher high, but a higher low instead, and then a higher high, etc. So there is essentially, those are signs of a bull run. And the reason why this is a healthy bull run is because it has plenty of retracement after it increases. Now, I'd prefer for it to go sideways and then increase, but the fact that it's coming back down and ramps back up goes to show there's probably some type of, something's controlling the market here, right? It's not people like you and I are doing this. It's likely the industry leaders that are controlling this. So the best thing to do is to identify what they're looking at and to utilize that, right? So let's look at the 1 day chart, the 1 hour chart, and I'll show you kind of what they're looking at. Again, minus what we've just identified already with the, the moving averages, for example, on the 4 hour chart, we just saw that with that, when the 50 intersected with the 200, essentially a convergence, that caused the price to increase, right? That was probably one of the major catalysts there. Now it's retracing back down, no surprise, but on the 1 hour chart, what we want to look at is the Ichimoku cloud. And this is a really cool tool to be able to utilize because the common rule of thumb here is that when the price is over, it's a buy signal. When the price falls below, it's considered a sell signal. Now it's not always 100%, right? But you want to try to line it up with the MACD as much as possible. So do you remember how I marked this spot right here on the 1 day chart of when the MACD converged essentially and told us that we had a buy signal, and you would have got 75%. When we're looking at this here, that's roughly where I marked it. Big coincidence that the price jumped up over the cloud right there at this point. Okay, so you'll see a common correlation between the MACD on the 4 hour or the 1 day chart. When there's a convergence on those charts, you can almost always identify within 1 to 2 hours on the cloud when the price breaks above. Okay, so again, this would have been an awesome buy signal here. Obviously it came up, went sideways, slight retracement, and then it slowly increased. So that could have been like a, it would probably be difficult to buy this and then just to sit there and watch it decrease. So again, with a swing trade, it's no big deal, right? You look at the 1 day chart, cool, I got my entry point, I'll look at it in a few days. Set your stop limits, etc. But generally speaking, that's what you look for. But if you can confirm on the 1 hour chart that the Ichimoku cloud is telling you that you also have a buy signal, that's like a double rainbow, I guess you could say, right? If you've ever seen that video or just understand the fact that rainbows are nice and you have 2 of them, this is a double rainbow, okay? So just something to identify. All right, so that's kind of what I'd recommend utilizing. Again, try to work your way down. That's why we look at the Bitcoin first and the 1 day charts and just understand how they correspond and communicate, right? So each chart has its own benefit. Another thing we can look at too is a TD sequential. Now this is going to probably be more helpful, closer looking back. It doesn't matter too much, but generally speaking, with a TD sequential, and again, this really is just an indication of exhaustion, right? So on the 1 hour chart, which it works the most effectively, it just kind of, what it does, it looks at the 4th bar behind the new bar and essentially tells you that it's lower or higher than that previous bar, right? And as that counts up to 9, once you hit a 9, it essentially will tell you that there is exhaustion that's occurring, right? So we hit a 9 up here, as you can see, we counted 1 all the way through to 9. So at this point in time, had you seen this 9 right here, even when the candle had just started, that would have been an exit strategy. That would have been an exit signal. Okay, big surprise is coming back down. So we could expect another 7 hours of retracement, right? And based on its history, there's a great chance it'll continue on that path because it has a tendency of ramping up really hard and then selling off slow and steady, approximately about 50 to 60% of its original increase. Okay, so just things to look at, things to identify. Again, not each one of these are perfect, but they all serve a purpose. So TD sequential 1 hour chart, Ichimoku cloud 1 hour chart. 4 hour chart, you're looking at the moving average, RSI, and MACD. Same thing with the 1 day too. All right, but always work your way down from top and you'll have much more success. Looking at the 15, the last thing we're going to look at here is the EMA and VWAP notification. This is a notification signal that I have created, of course, or my community members actually created this for me. Thank you, Ever. You're awesome. Really appreciate you. But generally speaking, what we're looking at here is 2 things. First of all, this blue line is the volume weighted average price. It takes the volume in the last 24 hours, expresses it as a price. So right now, based on the current point in time, we are looking at $1.20 as the average volume expressed as a price. whereas the price is $1.19. So there's not a large variance. That's a good standard deviation is very short. Okay, so we shouldn't expect to see any type of, I guess you could say, retracement further. However, we should still expect that. And I'll explain what I mean by that here. To clarify further, we also have the exponential moving average. That is this red line here. So if you're new to the channel as well, EMA is exponential moving average. I feel the EMA lines work a lot better on shorter time frames because they respond quicker to price action. The 15 seems to be the best, in my opinion, the best time frame for it, at least the EMA 15 that I prefer. You'll see the 9 and the 20 being thrown around or utilized consistently, and that's okay. Those are good indicators, but instead of having two, I just kind of take one and split the difference. It's less noise, and I think that you should only have 1 or 2 indicators and or oscillators per time frame, so that way you're not inundated with too much information. I mean, you see these people with hundreds of different color fragments, and things just get kind of crazy and nuts, and you got too much conflicting information. If you can just use 1 or 2 indicators to rule them all essentially on each time frame, then that works the best. At least I find the most consistency there. In fact, you can reference my signal group if you'd like. We currently have about a 88-89% success rate so far with just this strategy alone, right? So it's very effective, very very beneficial. So just pay attention here, because what I want to show you is how these things work together. So the EMA line is the red line. The blue line is VWAP, volume weighted average price. The VWAP is a support and resistance level depending on where the price action is at. Right now it's considered a resistance because it just broke below, but previously in this bull run here, you can see it's working as a support. Support, support. When the price bounced through the EMA, it bounced off the support level. Furthermore, the EMA also works kind of as a continuous momentous indicator. It tells us the bulls are in control or the bears are in control. Bulls are complete control here, as you can see. Price tried to retrace back down. Bulls said, no way, we're keeping this price elevated and up. Comes up, comes down, we lose EMA. Completely normal. It kind of comes down, breaks down below. And then, of course, the VWAP comes in to support the price and bring it back up above. And then again, comes up here, tests the EMA line, and keeps on going, right? Eventually, that standard deviation between the VWAP line and the price action had to retrace, right? So if we take a look here, this is probably over 10%. Look at that, yeah. To its highest point, roughly almost 20% difference. So what this is with the VWAP, and this doesn't show you here in this notification, but traditionally the VWAP has standard deviation lines above and below it. Those tell us when the price is outside of the norm and it's too over-exaggerated, and you likely see a return or a retracement occur. That's happening right here, or had just happened about 2.5 hours ago. So that's what's going on here. Again, price went too far away from the norm, right, the average volume, and it had to come back down. So pay attention to that as well. When I would say there's larger than 10% for 3, 4, 5 hours, then it's pretty safe to say the price is going to come back down. Furthermore, too, see these purple indicators here? That's kind of built into my notification. I do share this with my patrons. This tells us that the RSI is up over 70, right? So each time the RSI comes up over 70, it's risking a retracement coming back down. Again, it's something also to know. But very last thing to identify here, just so you know, and this is actually a perfect scenario. Do you see these 2 yellow arrows, these 2 little yellow up arrows? This is a signal to buy. And you don't need this notification to see this. These things are really straightforward. In other words, if you're going to try to join a bull run when it starts, right? Are you going to jump in when you don't have confirmation or when you have full confirmation? Well, obviously you probably want to have confirmation, right? That's kind of the idea. But if you don't know what that is, what confirmation is just getting a true actualization that the price is moving the direction you want it to go, right? And it has to be a certain amount of time too, right? Because if you just say you see a stampede on the street and you go and start running, you're going to get trampled, right? But if you know that this has been consistently running for 30 minutes or longer, it's going to be a much better stampede. I don't think that's the best analogy, but it kind of runs with the bulls, right? So what I'm getting at here is this stampede had just started. So for example, we've got one green candlestick here. Okay, that's closed up above the EMA and VWAP line. So check number 1. This is number 1. We're good to go. That's okay, great. 15 minutes of confirmation. I prefer 30 minutes. Therefore, this guy right here gives us confirmation number 2. Kind of hard to draw that right there because I'm so zoomed in, but you get the point. We've got 2 solid 15-minute green bars totaling 30 minutes, which is essentially these 2 guys right here. and this indicator is telling us that we have confirmation above EMA and VWAP. So take entry right there, and in retrospect, that would have been a darn good entry, because that would have netted you, again, depending on when you exit your position, upwards of about 50%. Obviously, you've played it perfect. That never happens. Just say 25%, you go somewhere in the range of here and you get out, or even if you get out right here, you're still looking at a percent of somewhere in the range of, oh, I don't know, that's maybe about 20%. But I think you get the idea, right? So that's the common practice. That's what you want to look and identify. Everyone has their own strategies and their own ways of, identifying and finding good entries. That to me is what I like to use, because it just seems to make the most sense. It's less moving parts. You've got two indicators and you want confirmation further, you just go ahead and take a look at the RSI. Okay, it's up over 70. I got to pay close attention. Maybe I want to sell when it comes back down. No big deal. So I know I make it sound easy. It isn't always this easy, but when you have all the information from the 1 day, the 4 hour, and the 1 hour chart, the cloud's telling you we're above the cloud and we're good to go, then you want to probably consider taking entry. So here's the point of the story is to be careful, be patient, because you can't just jump in willy-nilly, right? These are all things that are pre-planned out. That's why I focus on, in my signal group, for example, I focus on, I would say, 3 to 5 signals per week, but I'm only getting about 3 or 4 signals a week, because of the fact that these kind of entry points are harder to find, but the success rate is much higher, if that makes sense. So I'm more calculated. I don't like to risk. I'm more risk averse, and in a sense like this, there's really no risk, because it's almost a perfect scenario. Again, because I looked at everything. Yes, it takes a little more time, but it's more thorough and it's more effective. Right. So I guess to summarize here, if we're going to do a prediction, right? Because I'm sure that's why you're here. We want to look at the 1 day chart and identify, first of all, what's the average true range? I forgot to look at this earlier. So the average true range for this guy, first of all, we saw the retracement here on the 17th. It's right here. Okay. So audio is doing pretty good. First of all, it ramped up like it normally does, retraced about 50% of the way. Then it comes over here, starts selling off a little bit, but that's because Bitcoin was traveling down from 64,000 to 50,000. And then right here, we went from 52, 53, all the way down to like 40,000. That scared the crap out of a lot of people. So people pulled out. Came back up here. Bear in mind, right here, Bitcoin was going sideways at about 47,000, right in this range. Therefore, that tells me that the average true range for audio is somewhere in the range of 220, upwards about 275. We could just say $2 to $3 to be safe, a rough estimate, because it's not for sure. Average true ranges are based on averages, and that's just me eyeballing it. But that being said, the price being at $1.20 right now and holding above the 200-day moving average tells me that there's still room left in the tank. There's still gas left in the tank that can push up. Just bear in mind, it's history. It shoots up and then retraces about 50 to 60% of the way. So do you think this retracement is finished yet? Probably not. However, if we can get this day, which actually just started an hour ago, which we got plenty of time left, I don't think it's going to happen. If we can get this 1 day candlestick to close above that 200, then we should be able to see open season for another increase or two. Yeah. So again, that's my prediction, so to speak, is that audio will continue to increase, but it has to come back down before it can do so, just based on its history. Because again, history repeats itself in crypto, right? It just doesn't have to happen, but it commonly does. If I were to give it a statistic, like 70% of anything that I see in crypto has a tendency of doing the same thing over again. So just keep that in mind, right? That's why we look at the big picture. So I hope you found benefit from this. If you do, please like and subscribe. Feel free to reference my Patreon account as well. I do have a premium subscription service for my patrons, which is just a signal service that helps you find good signals. I send 3 to 5 signals per week of short and long positions that you can take advantage of. I usually trade Binance and KuCoin. Those are the 2 primary ones. So that being said, that's all I got for you today. Hope you have a good rest of your one. We'll talk to you the next one. See ya. Take care.